Today is Sunday, the eve of Monday, the trading day. What is it seems to me, the most important thing to know in trading is called trade invalidation. Whether you're an amateur or you're a professional, trades are made, and sometimes, based on the skill set, the trade will go in the opposite direction. When that happens, it's called trade invalidation. In trading stocks of any kind, that is the only way to lose money in the market. There's no other way to lose money. And I say it again. Sure, you can lose some money, $1 or $2 from the brokerage firms and leakages. It's called leakages, right? Every time I buy or sell, there's money that's given to the firms. However, if the money has any amount of money, the only way, and I'm making this, I'm saying this more than twice or three times. The only way to lose money in the stock market is by something called invalidated setup. Now, here's an example that I need to describe to myself. So I look here, this is Apple Friday, and I'm looking here, is this a setup for me? And I'm thinking, okay, so if I were to get in here, what would it be called? Could this be a possible head and shoulders? Shoulder here, head, and maybe a shoulder here, and if I were to get in here? Okay, so let's say somehow I survived this, and then it comes over here, and I see this part right here. Okay, so let's say somehow I've connected the dots and it looks like a double bottom here, but it doesn't really look like a double bottom because it actually set a trend and broke and then came back. So it really does not contain a continuation or a setup that's called a double bottom. So let's say I got in here. So if I were to get in this point, it means that my setup is based on the premise that this is a double bottom. I'm very excited today because this is a significant discovery in my trading. And pardon me for being so excited. So here I would get in, okay? Concluding that the setup is this, double bottom. So I get in here, and then sure enough, right after I get in, oh, hey, it's making money. And all of a sudden, it just drops, and it reaches at this point. Then I would have to say to myself and conclude to myself, the trade has been invalidated. The trade that got me in here for a double bottom has been invalidated by the fact that this candle has reached below where my trade point was. And so whatever happens, even if it goes up, I need to sell because it has been invalidated. I have to throw out this premise, and the point that I got in here for that particular reason is broken. I cannot stay in this trade. Sure enough, had I kept it, it would have gone up and it would have made a little bit more money. However, it would have just tanked and I would have lost a substantial amount of money. Therefore, whether I'm an amateur or a professional, the only way to lose money is by keeping a share, even though the trade is an invalidated trade. Therefore, stop loss is great. It's great. There's a mental stop loss. There's also a hard stop loss. However, when a particular setup is entered, like this double bottom, and it does not prevail in the direction that the setup is supposed to prevail, then as soon as I see this invalidated trade, I need to get out at this point, and I will never lose big money ever again. I will lose a little bit because of the expense in purchasing and selling, the leakage cost, along with a small difference to verify that this setup is invalid. This is, to me, the most important part of my trading. I may have everything all set up, but this is a point that allows me to get out before I lose a significant amount of money. Or, quote, the expenditure for training or tutorial cost.